More corporate news now from JSE listed companies, but this is not just a JSE listed company, this is a global giant. Its name is SABMiller, and SABMiller PLC today has issued the following update on trading for the 12 months to the 31st of March. And I suppose the big headline is, for such a big company, is that group revenue for the full year grew by 7% on an organic constant currency basis, etc., etc. It's selling a lot of lager, apparently. On the line now from London is Julian Wentzel, who is the head of research at Macquarie. It continues to go from strength to strength, Julian, doesn't it?
Yes, I think this reflects the diversity of the portfolio, the fact that the business is exposed predominantly to developing markets. And so there's an organic embedded growth ratio that they have, which is a significant advantage relative to their competitors.
If you have a look at the different geographies, I mean, let me just contextualise this. I never know where to start with SABMiller because it's such a giant. Do you go with products? Do you go with geographies? But I think geographies is the most relevant way to start analysing such a performance. What has been the standout performer geographically?
Well, I think of a surprise, I suppose, to the market was a slight decline in volumes in the final quarter in Latin America. And as a reminder to the viewers, Latin America accounts for nearly a third of total profits, and we had a 1% decline in volumes in the final quarter. That being said, it was cycling a very tough base where it was up previously 8% in the like-for-like comparative quarter. The US was again somewhat disappointing, volumes down just over 2%. And I suppose the bright spots were, one, the turnaround of performance in Australia, where we saw a growth of 3% in the final quarter. If one looks on an adjusted basis for the brands they're disposed of, volumes were down 5% for the year. So it looks like Ari Mervis and the team in Australia are getting things right. China, again, a very important growth driver, volumes for the year up 5%. We also saw some encouraging signs out of India. And I think what of note was really interesting in Europe, we saw a significant uplift, up nearly 8%, and it shows very heightened price elasticity in the market. We saw, in Romania, volume up nearly 24% as they introduced discounted brands, and we're seeing, people consuming more at home, less on premise, and the price sensitivity of consumers is heightened significantly in the modern world.
Well, let's start with that European story, because finally, is it
I think close to the viewers' hearts? Volume of the final. Sure.
No, sorry. Carry on with the South Africa story.
Yeah, and then just in South Africa, I think, obviously volumes up 1% in the final quarter, 2% for the year. Very tough trading conditions, but again, it looks like the business is taking share, and Castle Lite continues to go from strength to strength.
The European story is very interesting because obviously Europe is a beleaguered economic nation, by the way, because I suppose when you are under pressure economically, you do sit down at home rather than go out, and it's easier to get a six-pack than it is to go out and drink six at a bar. What with driving restrictions, etc. It's almost as though the Eurozone demise is playing into the hands of SABMiller.
Yes and no. I think for SABMiller, they like to develop a ladder in terms of the price ladder from affordability right the way through to the premium segment. You definitely, from a channel and price management perspective, you want people consuming on premise. That's how you build brand equity. That's where people want to be seen drinking the right beer. Usually when people go home and drink at home, they're more value conscious and drink the budget offerings. So what you do is you end up devaluing the profit pool by having more people drinking at home.
Looking at China, which is one that we haven't really mentioned, the Chinese market is extremely big in terms of volume, but extremely difficult in terms of margins. Margins very skinny indeed. But when you look at the future of SABMiller, is that one area where you think that despite all the acquisitions that they've made in that particular territory, they can do more and can become dominant, and it might actually be the jewel in the crown in the future?
Look, China presents an enormous volume opportunity. I think the real challenge is convert that volume at a price that is profitable. So it's not really about the margin in China, it's more about the absolute price you achieve per hectolitre or per litre sold. China remains still on a per litre basis one of the cheapest markets in the world. You can still buy a beer for just over 40 US cents a litre, which is incredibly cheap.
Full year lager volumes in Africa growing by 6% on an organic basis. You mentioned South Africa, the rest of Africa, of course, incredibly exciting. Most South African companies that aren't already well represented in Africa are looking at the continent very jealously and wondering why they haven't concentrated on it over the last decade or so. SABMiller, of course, not in that camp. Is this also one of the future shining stars or increasing shining stars?
Yes, they've done an enormous amount in terms of adding incremental capacity in Africa. They did a fantastic deal some years ago with the Castel Group. That continues to grow very handsomely. You know, volumes up again 6%. CSD volumes for Castel up 9%. They have a wonderful portfolio in Africa. The only area that I think they are somewhat underclubbing is in Nigeria. They continue to try and compete in that zone. They've built some new capacity in Nigeria. They are still the #3 player in that market and will be what I would call an able challenger for some time to come in Nigeria. But you know, Africa presents a wonderful opportunity from a pure demographic perspective.
Yes, it does indeed. When you look at SABMiller and you look at its valuation, you look at its share price in whatever currency you care to look at it, every single year that I speak to analysts who know the company very well, they say, well, you know, Lindsay, when I ask them the same question, I say at the end of the interview, do you buy it now? They say, well, I can't really bring myself to buy it here now because a year ago it was at this price. What's your attitude towards it?
I think it's a must-have in anybody's portfolios. It's given you a wonderful return. If you look on a dollar-adjusted return basis, over 5 years, you've got 225%. It continues to be an asset that is of high quality, extracting enormous value for shareholders. They continue to grow the volume base. I think it's a very important structural shareholding in anybody's portfolio.
I would agree with you. I just can't believe what I'm seeing on my screen now. 468 Rand a share, up another 2 Rand 34 today, up 0.5%. The way it grows, of course, is organic, and it's very, very good at growing its organic volumes and profits. And it seems to move with the trends. But what about corporate activity? Is there any chance that there's going to be any meaningful acquisitions over the period in the future?
I think SABMiller will continue to follow a process of buying opportunistic assets in markets where they're already either #1 or #2 player to augment their presence in those markets. I think in terms of foundational deals or transformational deals, I don't think there are any obvious deals on the near horizon. I think they will continue to look at opportunities in those countries that they currently already operate in. They'll look for adjacencies and get synergies from those adjacencies.